XF and Forex Trading Unlocked, and we are here on May 4th, 2020 with the live Forex market breakdown and live trading analysis for you. And before we get into it, we just want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. And we have a couple trading signals that we're going to show you that are going on in some of our Forex currency crosses. And they are high probable Japanese candlestick patterns that have triggered these signals. And by the way, there's actually a book called High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle version. And with that, let's get to our live screen with our Forex-Trading-Unlocked.com website pulled up. There was some numbers that kind of were a little mixed for the Swiss and for the pound today, but we're going to skip past that and take a look at our charts right away. And we're going to go and look at how the dollar index settled last week. You can see it was a perpetual little slide testing support. Today it's kind of a neutral day, and we're going to take a look and see how we finally come into, I think, this choppy zone where we've had so much volatility over the past couple months, and now the month of April things started to settle down and set ranges in our major currencies, and now we're going to see how these things are manifesting, what kind of trades that we have. So let's go first off right to our biggest component in the US dollar index. We're going to go look at the Euro US dollar. Now, what do we have going on here? The Euro US dollar is a little heavy today, but you can see that we have this little parameter here of $1.1153 down to $1.0725. That pretty much is what the range was for most of last year, basically $4, and now that was all in a month. So we don't really have much to go on except for the fact that we have consistently made lower move lows with lower move highs until last week. Friday we had spiked higher, so we had made a lower move low with a higher move high, which sets us up for neutral. We are really pretty much thinking that over the next couple months, after all this volatility, as things start to subside, that we will start to see more and more of this kind of just a little bit of a range trade. Now remember, is it hard to fathom that the euro could be stuck in a $4 range for the next couple months? Well, gee, I don't know. You want to go back to last year and take a look at it? You know, at any given time, you know, we have a whole quarter here was stuck in a $3.50 range. So more of the same from what was going on in 2019, well, for a short time, I think. So right now, we don't have any signals in the Euro US dollar. We don't have any positions on, and we're looking for this to kind of be the thing that's calming the US dollar index, but not necessarily making it a bear. So even though the dollar index has been under pressure, we'll start to show you why. So I think that even though these markets have started to consolidate, they're going to not going to be what's going to really give us the true direction for the US dollar index. We're going to have divergence in currencies now, which is kind of good. We're getting back to, I think, the normal environment of currency trading. The coronavirus fundamental, I think, is it's not off the table, but it is no longer the driving force for most of these markets. So let's look at the British pound US dollar. So we have a little bit of a weakness going on with the euro versus the dollar, and now with the British pound US dollar, let's see what we have going on here. We have an interesting trading setup. Today the market is a little bit lower after Friday's sell-off. Thursday we had failed to make a higher move high. As you can see, we have a shoulder, head, and shoulder with a nice neckline here. We had a dark cloud cover sell signal on Friday, and today the market is trading slightly lower. So what does that have us in? Well, we're definitely in a neutral posture now, but if we take out this neckline right here, that's a big deal. Let's see what happens. We still have this swing low here that could contain this range. Perhaps this is going to start to get choppy just like the other ones. Remember, the British pound is one of the majors versus the dollar. The euro and the pound are the two biggest currencies that compose that index. And if they start to go sideways, like I said, that would be one of the reasons why we're going to have this possible divergence where the bigger currencies are going to start to chop around in a range, and some of your lesser currencies are still going to trend versus the dollar. So we're going to see some interesting dynamics, I think, unfold over the next few months. But right now we do have a head and shoulders pattern forming. We have a dark cloud cover sell signal that is helping to reinforce this second shoulder to ignite the sell signal and the trend lower. And we'll see what happens. For all we know, we could reverse gears and make a new high, and then boom. So that's for you very bullish guys out there, women, people. Any breach of this $26.58 definitely has us on the bullish campaign. But a failure of this neckline will have us hard pressed looking for support to be tested down to 121.72, and any failure here has us definitely targeting this 120 down to 118 area range. So we'll see what happens with that. Right now, like I said, if we are going into a sideways trade, and we really could be when you think about this one here. What are our flight to qualities in this world? We have the dollar. And then we also have the US dollar Swiss. Well, the US dollar is gaining a little bit of strength also in the Swiss versus just like it is in the other European currencies. But look at this. It looks just like the dollar index, a big sideways here. Now this one here, unlike the euro, this had made, oh yes it did, it also made a slightly higher move high and then a lower move low, and this is kind of giving us more of a reason to believe that we are going to have more of the same. So there's really not much to say about the Swiss because it's pretty much a reflection of what's going on in the euro as well as the pound. Europe is coming back online, so the coronavirus fundamental I think is off the table. Remember, this market also, it trends nicely, but it's not unlikely for this to settle into a nice $3 to $4 range for another month or two, which at least if it swings around in that's some decent volatility still. Otherwise, if it starts to really flatten out, well, then we know that we have to wait for a signal, right? We never want to just force a trade, right? So now let's look at the US dollar, Japanese yen, and see what's going on in Asia. All kinds of conflicting things about what's going on with China and what have you. And now let's see what we have with the Japanese yen. Now here's another market that has consolidated over the past few weeks, but still has continued to pressure support. Now we have a bullish engulfing line buy signal that occurred last week. The market is still going sideways to lower, so we're just using that low of 106.34 as our buffer for support for any bullish sentiment, with an upside target zone up here of 109.00 up to 109.68. So it's kind of a tight target zone. This would be a big deal. If you think about this, the trend right now has been lower for quite some time, right? So let's see what happens. The one nice thing here is that if you look at how this came off this last high right here with this bullish engulfing line, we're coming through just by attrition of time through this downward sloping resistance. So does that mean that we're all of a sudden going to become bullish? Not necessarily, but it's a good chance that we're finding support to begin to set this range that may be contained between these parameters and may fall below this upside target zone. So right now we do have a bullish signal. Whether or not this manifests, we have to see. So right now that is one of our first signals of the day. So we have one high probable Japanese candlestick pattern. Remember to check out that book. Just like subscribe to this YouTube channel so you'll know be notified when we're covering these different signals and what have you. All right, now let's see what's going down with the Australian dollar, US dollar. So speaking of signals, and trades as well, we have the oh wait, I forgot, we do have the US dollar yen trade on. So just to show you, we do have the US dollar yen. Where is it? US dollar yen, here we go. So here we have the Japanese yen. We are long the US dollar yen from 106.78, and we're targeting the 109.62 area, which is right in the middle of that area. Now we also have a short from this dark cloud cover, this Australian dollar, US dollar. We have this downside target zone of 60.39 down to 59.10. We shorted that last week at 65.22. We're targeting the 59.25 area, which is right in the middle of that zone. So this is where we're looking for. Now the nice thing is that as of today, yet last Friday we had settled on this upward sloping support line that was holding the short-term trend in a bullish fashion. Today we have gone lower, even though we're not that much lower, but we are following through. Just by attrition, this is coming off through support, and we'll see if this can maintain some follow through. Right now we do have dollar strength going on in the marketplace versus some of our majors, so why wouldn't it also be reflective of also the Australian dollar, US dollar? So now let's look at the New Zealand dollar, US dollar, see if we get any now this is a market that typically has been trading in tandem with the Australian dollar, US dollar, but there's been a little bit of a divergence there as well. It hasn't been extreme as the Australian dollar has, but this one also, even though it hasn't given us a valid sell signal, has been coming off of resistance, just like the Australian dollar has. So, but this could also be just consolidating. So since this one doesn't have a signal and we've made higher move highs with higher move lows, then we have to basically ride the theory that this is still in a bullish trend, which that could also happen. We could see strength in the New Zealand dollar versus the Australian dollar. In fact, why don't we look at that? Let's look at the New Zealand dollar. Oops, wrong place. Okay, New Zealand dollar, Australian dollar. Let's see what's going on between these two. New Zealand dollar hasn't been doing so well. against the Australian dollar for quite some time. But look at that. Today it is a little bit lower, but the past few sessions it is trying to, it looks like, set a corrective move higher. So let's see. Maybe this is the time where we have some divergence where New Zealand dollar may not be reacting just like the Australian dollar against the dollar and the yen and those correlations as far as that trading zone. So we'll see. But right now, what do we have? We have the US dollar, Japanese yen once again. Whoops. Oops, not there. Wrong place to put the symbol. Sorry about that. Okay, come on. We're really running in a lag here. All right, let's see if we can get this right now. Delete US dollar JPY. Okay, there we go. This should pull it up. It is loading. There we go. Back to our US dollar JPY. So we had our first of our signals. This is bullish engulfing line. So these two in that trading zone have some sort of signal at least. Now both of these are positive. The US dollar, which just like I said, remember the dollar index, we're not looking for that for total direction now for most currency crosses. We're looking for divergence now to go in, with our theory that the dollar and the major currencies are going to start to set a range and have a dynamic of basically going sideways for the next month or two as we start to absorb the coming off of the coronavirus fundamental, which has been driving the markets. Not that it's not going to still have an influence, but I think that it is probably starting to wane unless we have another leg down and another big surge. Hopefully that is not the case. Now let's look at some of our lesser currencies versus the dollar. The US dollar, Turkish lira. Turkey continues to grow in number of cases. It still has not flattened out the curve. So this trend, as you can see, it's a vicious bull and continues now to breach resistance and press new highs. I have to say this one I think is going to be fundamentally driven for a while. How high can it go? I have no idea. But it's definitely when it comes down, it'll probably be some big swings. If you have not already been long and gotten into this trend and are riding it, I would say be very, very cautious. This is a very widespread market to get in and out of, let alone just be on the right side of. So, but the fundamentals here are still in place and driving this. And this is where it gets back to where we have definitely divergence, where dollar strength, I don't think this is going to wane against Turkey for quite some time, at least until they see a big flattening of the curve. And the same thing with Iran. But Turkey has been moving up on the charts over the past month and a half, and now I think it's like 7th in the world for total cases. So that's a big deal to take a look at. Speaking of places where the coronavirus is still being a factor, US dollar in Mexico. Now we have a head and shoulders formation that has occurred. Look at that wedging. We got a lot going on here. So on many technicals, there's all kinds of things saying, yes, we're going to have a breakout eventually. Well, yeah, that will obviously happen eventually. But we could go sideways for a while still, if this was one of the other major currencies. I think that as the cases continue to grow in Mexico, their curve is not flattening yet. It's actually still rising. There's still, even though this head and shoulders pattern has been set up and we're looking for a break right now, it's wedging. And I think that unless we get a confirmation of taking out one of these last swing lows, see, that's the thing, is that we've made consistently higher move swing lows, although we have made recently a lower swing high, but that doesn't necessarily make us bearish. So let's see how this manifests over the next couple of sessions. I would say if you are a bear, use your risk here. The last swing high is a good risk, just like the last swing low is a good risk for the other side. So for being in a weak bull, this would be a good area to buy against, and that would be a good area to sell against for weak shorts. I would be very cautious, though, selling this market, because any rally that makes a higher move high most likely has the US dollar peso set up to hit through the last high at the beginning of April and breach this probably 26, pushing maybe even 27 to 28 pesos on the dollar before it starts to plateau and set a range once again. So remember, this is one of the markets where we definitely have a little bit more coronavirus fundamentals still breaching out. Now, one of the first markets to really consolidate was the US dollar Canada. They had such a big rally and such big volatility that it came off early and it has been trading in a choppy way lower. Now, 2 sessions ago, we had a piercing line, another high probable Japanese candlestick pattern. Irony of it all, just like with the Aussie, it is now breaching something that has kept the trend in place. The downward sloping trend line here, keeping this market in place, was breached today. Right now, it's bobbling right on that threshold. Now, we have still made consecutive lower move lows and lower move highs. However, if we take out the last swing move high, that would put us right into what? Our upside target zone. So does that mean that we're going to all of a sudden explode higher? Maybe not. I think most likely what's going to happen, should this buy signal manifest its target, that will hit this area and probably start to buffer off of it. I mean, let's be real here. This market has basically been sideways since the middle of March going into today's trading. So, and considering how big of a rally it had as well, this is one of the major currencies, and it really had an extreme. So it was one of the first to consolidate. Now, the question here is, dollar strength right now doesn't necessarily mean that the dollar is a big raging bull. It's just right now, currently, dollar is having a little strength versus the Canada, and that's manifesting through this buy signal and this breach of this downward sloping resistance, and we'll see what happens over the next few sessions. Now let's go back to the Euro US dollar real quick and see how things have been shaping up since we started this webinar. Remember, we started off with the majors, and yep, it's still on its lows. So dollar strength seems to be tapping into Monday's trade. Now remember, the dollar was under pressure all last week. So let's go look at the dollar index as we close out this seminar or this webinar. And remember that we don't have very many signals. We showed you the ones that we have in place right now. Once again, we don't have any options trades on, but we do have 3 Forex positions on. We are long the US dollar Canada, short the Australian dollar US dollar, and long the US dollar yen. So basically, obviously, we are all we're very bullish the dollar in those currencies, but not overall. Remember, we're looking to most likely see this thing chop into a little bit of a range trade. And even if we just go sideways, let's just say that the major markets don't move very much against the dollar, and the dollar continues to stay strong against some of your lesser majors. That just has it going sideways and doesn't have it coming to take out this downward sloping resistance yet. Now, should we take out that, that doesn't necessarily make us bullish either, just like the other ones. It will have us just in this little trade here. In fact, let me show you something. There's a good chance that we're going to just kind of go like this for the next couple months. Does this mean that it's going to happen? No. But we are set up for the conditions for this to happen as we start to try and find some sort of transparency in what is going on with the European currencies and also all these other currencies around the globe. So be mindful of these things. Remember that the dollar index, as it was such a very good indicator for the past couple of months because of the fundamental with the coronavirus, now it is not anymore. So we're starting to see divergence. Pay attention to, be disciplined, but pay attention to signals. Act on those. Don't just try to trade the trade right now, because range traders are probably the only ones that are going to do very well for the most part in a lot of your major liquid currencies. For buying into new lows and selling into new highs is probably going to be a very good short-term trading strategy. For those of you who are not range traders, I don't suggest you trying to do it, because you won't realize that you're no longer in that scenario before you get clobbered, and any gains that you will have made, you'll probably lose very quickly on a trend move if your parameters aren't tight. So that being said, thank you very much for your time. Please check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and also paperback version. And subscribe to our YouTube channel, Forex Trading Unlocked. And also check us out at www.forex-trading-unlocked.com for all your Forex and online